you're the Miami half of Team Alexander. You just did this deal on this $50 million home. What made this home worth $50 million?
Well,
I'll
first
take
off,
that question,
Indian Creek.
Robert.
Sorry, Oran, yeah.
Go ahead, Oran.
The sale actually took place on Indian Creek Island, which is by far the most exclusive, secure, and private neighborhood in the world. And we recognized that early on. In 2012, our father actually developed a home which we sold at the time for a record price of $47 million. Fast forward 7 years later, we just sold it today off market and broke our own record for $50 million.
So what are the wealthy looking for in Miami? What kind of product is in demand right now?
So I think the one thing that's consistent around the world, as you see with our recent trades in London and in New York, that the wealthy, the high net worth individuals and their taste has gotten much more sophisticated. And there's few and far in between product that caters to them. And Indian Creek is one of those places, as well as Faena House. When we marketed that product about 4 or 5 years ago, that was another product that really catered to the high net worth individual.
Now, Tal, you do New York.
Focus more on New York.
Oran does more Miami. Are you seeing a lot of people in New York listing their apartments with the intent of moving to Florida because of the tax changes?
That's correct. I would say since Trump news tax reform, we've received a few phone calls where our clients calling us, telling us to list their properties in New York and that they're coming down to Miami sometime in the near future and that they want to buy something down there and looking to move their families down there essentially.
So you get the listings, your brother gets the deal to buy the house in Florida. You get it on both ends with this tax change.
It's a family affair with us.
Well, Tal, what is the main driving macro factor for these types of trades? Is it international money, domestic money, tax rates, interest rates?
Well, I think it all depends on the market and all depends on the asset, but I think a lot of our clients have a long-term view on these trophy properties, essentially, that they're buying. There's more global demand for these trophy properties and there's actually availability.
What is Ken Griffin doing stacking up a portfolio of trophy properties lately?
So I'm not here to talk about my clients or any of their deals,
but the cover of the New York Times real estate sector. I mean, this is everywhere. It's getting a lot of press, and he's getting some of the most expensive real estate in the world.
Yeah, again, not here to talk about my clients' views in terms of where he likes to invest, but I can tell you 220 Central Park South is a really unique building. It's the first new construction on Central Park within the last decade. If you look at that particular project and at 15 Central Park West and all the success they had, they copied a lot of similar ingredients that we saw in terms of Robert A. Stern, and a little bit different though. Higher ceilings were delivered, bigger windows, and Tier Despond, of course, did the interiors, which is very different than what 15 Central Park West delivered.
I know you can't therefore talk specifically about Mr. Griffin. That said, we've all seen the coverage that he also bought a big property in London. At the same time, he bought a big property in New York. Kind of similar markets, I guess people would have traditionally thought. We were just discussing the price per square foot of those purchases was $6,000 in London, $10,000 in New York. So London, a lot cheaper there. Do you put that down to factors like Brexit? Is it creating a lot of opportunities for super high-end buyers to get in whilst the pound is...
Well, definitely. We think there's a lot of opportunity in London right now. If you look at all the uncertainty going on with Brexit, and we'll see how the dust settles at the end of March. But, it's also tough to compare a condo to a townhouse on a price per square foot.